After 2 years of extensive research, Reed has developed a unique approach to the US student debt crisis. Our solution offers millions of borrowers a way out of the student debt trap and the challenges associated with it. Reed is the only provider in the market that offers a fully integrated product that does not rely on interest rates or credit scores. In addition, our product includes an embedded savings plan as well as unemployment protection and is fully tailored to each individual's circumstances. Welcome to Reed. My name is Alberto, I'm the co-founder and CEO, and over the next couple of minutes I have the great pleasure to walk you through our business.
Reed takes care of millennials' finances so they can focus on building their future. Our comprehensive solution addresses the main issues associated with student debts. Poorly managed student debts have dire financial, psychological and economic consequences for the individual. Our forward-looking risk assessment methodology does not require the credit history, allowing us to tap into the underused student debt refinancing market. We enable student loan borrowers to optimize debt repayments while simultaneously building up long-term savings as well as emergency funds. My colleagues and I have over 100 years of relevant experience, and we worked for some of the largest and most reputable institutions in their field. We have all the skills and experiences needed to set up, launch, and build Reed into a successful company. We have invested well over 4,000 hours in researching the market opportunity and identified a target audience of 5.6 million borrowers that would immediately qualify and benefit from our solution. The overall market structure is leaving millions behind and trapped. The market shows various real pressure points that we are all addressing. Our solution is based on various elements that are integrated into one product. At the core is a disciplined budget view that determines on an individual basis the disposable income, which is used to establish an affordable and sustainable payment plan. Over time, as individual circumstances change, so does the repayment plan. Reed therefore offers the utmost flexibility in terms of duration as well as pricing. The payment plan includes not only the repayment of the student loan itself, but also makes allocations to an emergency fund and a long-term savings plan. We insure our clients against unforeseen events such as unemployment or disability through an embedded collective insurance pool, which will ensure that no compounding interests or penalties are charged in case of default. Our model is forward-looking and uses both traditional as well as non-traditional indicators. Our business will be structured through a regulated investment fund that will pay the outstanding student loan balance to the existing student loan lender, and in turn enters into a customized repayment plan agreement with our client. Reed generates revenues through management and performance fees levied on the assets under management. In terms of marketing strategy, Reed will put emphasis on building B2B partnerships, both in terms of fund investor distribution as well as client acquisition. We find that the B2C space is very crowded, and with only 4% of US employers actively offering benefit plans to their employees with student debts, we see a huge potential to enter this space. This will not only benefit Reed in terms of client acquisition, but also helps creating stronger relationships between employers and their staff. Already today, we have been able to establish relationships with various service providers that will support the company in all core aspects of the implementation, and we are in ongoing discussions with additional partners. We are uniquely positioned and have both the potential as well as the ambition to disrupt the entire student loan refinancing industry. The market is dominated by the federal government and its loan services, as well as a few private players. While there are various kinds of loans available, the product landscape is currently very homogeneous and has hardly seen any innovation. We are unique not only because we integrate insurance and savings elements into our solution, but also in the way we determine risk, price, and duration. In fact, it is this market structure that creates entry barriers for many. The majority of financial institutions use risk-free interest rates as the basis to determine the cost of capital and add risk premiums, which more often than not are based on credit scores. Our research has shown that neither the level of interest rates nor credit scores are reliable parameters to determine and optimize risk-return profiles. This concept has proven to fail in the past and in recent history resulted in a variety of asset bubbles. In addition to this, with the government controlling 90% of the market, not only in terms of absolute numbers, but also in terms of setting the regulatory framework, it is the government which de facto sets the benchmark for the entire industry. Our refinancing model and risk methodology are set up in such a way that we can operate largely independent of interest rate level and credit scores. Moving on to our financials, to date, Reed has raised $100,000. We will break even with 12,500 borrowers or $450 million in assets under management, which corresponds to a market share of only 0.2%, a number that we find very realistic and achievable, especially given the fact that our survey indicates an overall level of interest in our solution of over 70%. Based on conservative assumptions, Reed will become profitable in year 2 post-launch and will have generated accumulated earnings of over $22 million by the end of year 5. Over 30% of the proceeds of the funds we raise will be allocated to refine our model and develop our product. Associated to these development costs are staffing expenses of approximately 1/4 of the budget. This is to attract and retain the right talent needed to strengthen the team. As for the setup costs, these are mainly related to obtaining regulatory approvals, and we have put aside 10% of the budget for that. Marketing and SG&A expenses account for another 20%, leaving us with a comfortable reserve buffer of over 10%. We are looking to raise up to $3.75 million for 23% in the company. This will provide us with sufficient funding for a period of up to 18 months until we launch our first fund. We are certain we have all it takes to create a unicorn business that will offer a great upside potential for investors, with a possible exit after 5 years, either through acquisition or IPO.
Reed is looking for investors who recognize the opportunity the student loan refinancing market is offering. Investors who want to change the economic realities for millions of American student debt borrowers and their families. And investors who believe that Reed will profoundly change and disrupt the current consumer lending industry. If you're interested, please get in touch. Send me an email, check out our website, or follow us on LinkedIn. On behalf of the entire Reed team, thanks for watching and your interest in Reed.